Hello and welcome to Business Arena, live from Warsaw on TVP World. I'm your host, Marie Cato. Let's go to the latest business stories of the day. The price of gold continues this year's upward spiral. In late September, it reached yet another all-time high. An ounce of gold now costs $2,666, nearly a quarter higher than at the start of the year. This massive growth is attributed to the fact that during times of uncertainty and forecasts of a weakening dollar, people tend to invest in what are considered secure assets. Further price boosting is the result of lower supply. According to Van Eck, new discoveries of gold deposits have shrunk threefold since 1990. Gold isn't the only precious metal seeing significant growth, with silver's price climbing to a 12-year high. The company selected to build Poland's second nuclear power plant insists that the project is underway, even though it has no public backing. The assembly of the first reactor is expected to be completed sometime between 2035 and 2036, and construction process is expected to start around 2030.
The latest update on the project was provided during this week's meeting of the Parliamentary Committee on Maritime Economy and Inland Navigation, attended by Tomasz Nowacki, the CEO of PGE PAK Nuclear Energy, the plant's developer. The committee fielded questions about a dispute between US firm Westinghouse and Korea's KHNP, with the former accusing the Koreans of using their technology to construct nuclear power plants, including the one planned by PGE PAK near Konin in central Poland. According to Mr. Nowacki, the spat is nothing to be concerned about, as a similar dispute already occurred when the Koreans were building a power plant in the United Arab Emirates. In this case, the parties managed to reach an agreement, and the investment did not suffer. The future of the project is murky, however, since current Polish nuclear strategy only mentions one plant. The second one could be included in the update of the document, expected by the end of the year.
A second Polish astronaut is set to make history next year by traveling into space. However, financial hardships faced by one of the companies involved could jeopardize the mission.
3, 2, 1, ignition, engine full power.
After 3 successful trips to the International Space Station, the AX-4 mission, organised by Axiom Space, is on the calendar for spring 2025. The mission holds particular significance for Poland, as astronaut Sławomir Woźniański is expected to take part, marking the first time in nearly 50 years that a Polish national would fly to space. However, there are concerns. A recent Forbes report reveals that Axiom Space, the Houston-based company involved in the mission, is facing financial difficulties. It's been reported that they've been unable to pay wages to their employees and still own $670 million to SpaceX. These financial struggles have cast doubt over Axiom's ability to follow through on its promises, including the construction of a low Earth orbit space station module that has already faced multiple delays, as well as downsizing. When asked for a comment by the Polish press agency, the European Space Agency said that it is certain that the mission will proceed as planned.
We've been focusing on Central and Eastern Europe this week, but today we want to head south. Today we'll shift to the West Balkans and renewable energy transition, amongst other topics in southeastern Europe, so stick around for the bottom line. Tariffs on Chinese-made electric vehicles are driving local manufacturers to explore setting up new production facilities abroad to avoid high duties. In particular, Southeast Asia is poised to benefit from these changes.
Vietnam, with labor costs about half of those of China, is emerging as a prime location for EV assembly. Geely Auto, China's second-largest automaker, is spearheading this move by planning a new plant in Vietnam in partnership with Tasco Joint Stock Company. This facility will produce 75,000 cars annually, marking a significant investment in Southeast Asia. The countries where the investments are to potentially be set up are doing everything in their power to help the process. In July, China's BYD agreed with the Turkish government to build a $1 billion plant in Turkey with an annual capacity of 150,000 vehicles. To accelerate the process and put pressure on Chinese automakers, last week Turkey's trade ministry imposed strict conditions on the import of plug-in hybrid vehicles from some countries, including China. Despite looming tariffs, Chinese EV companies are thriving. Geely shares have surged 40% since August, and BYD's shares have risen by a third this year. The trend of shifting assembly abroad could boost exports and help automakers navigate rising trade barriers.
The ambitious project to build the external port in Gdynia faces yet another setback. Initially scheduled for completion in 2028, the development has been hit with additional delays due to ongoing complications, including the potential involvement of Chinese investors.
The external port is a public-private partnership in which a private investor will finance the construction in exchange for a 30-year operating agreement. The project's cost, initially estimated at slightly below €1 billion in 2020, has now surged to over €1.1 billion. The selection of a private partner, originally slated for late 2023, has now been postponed for the fifth time, this time to June 2025.
The bidding term is not postponed primarily due to any changes in regulation circumstances, but it comes from the fact of changing the economic situation of the region.
The Gdynia Port Authority points the project's complexity as the other reason for the delay. The new facility will feature a universal deep-water terminal with a minimum capacity of 2.5 million TEU annually, equivalent to nearly 25 million metric tons of cargo. However, the potential involvement of Chinese investors has added a layer of geopolitical concern. Chinese interest in the project highlights Beijing's growing influence in global maritime infrastructure, controlling 70% of the capacity of the world's 20 largest ports. Among the potential investors is Hutchinson Ports, a global network operating in 25 countries. Although registered in the British Virgin Islands, its parent company CK Hutchinson Holdings is based in Hong Kong. China has already leased a wharf within the Gdynia port, spanning around 20 hectares and nearly 600 meters of quay. These ties have sparked national security and economic independence concerns, leading to delays. In response, Gdynia's container terminal, owned by Hutchinson Ports, has been added to Poland's critical infrastructure list, giving the government greater oversight to ensure port security.
This law would not exclude anybody from the bidding process, except for Russia, which goes without saying.
Officials stress that the port's expansion is crucial for Gdynia's future as a leading maritime gateway. They continue to push the swift action to keep this vital project on track.
And that's all for our latest business news updates. For more of the latest business stories, check out tvpworld.com.